Very high inflation today in Israel. What is the central bank doing to combat it?
First of all, Hadley, our inflation rate is 5.3. It is above our target, which is 1 to 3%. But as you can tell, relatively to the rest of the developed economy, it's still relatively low. We've been determined. We've been aggressive in raising rates from 0.1 to 3.75. And the last two readings were 5.3. And we believe in the first quarter, maybe the second quarter, we will see a more significant decline in the inflation rate. It takes time for, once you raise rates, for them to take an effect. And basically, most forecasters, as well as the central banks, see inflation come down back into the target sometime around towards the end of 2023. And so that's our basic scenario.
So you're not worried, is what you're saying?
Our job is always to worry, Hadley, and there's a lot of exogenous factors. About a third of the CPI is basically tradable, and so we need to make sure that inflation abroad also comes down. And now China, once they open up their economy, that could affect inflation from abroad, and it's always the hardest to take the last 5 pounds of a diet. And so similarly with inflation, to make sure around the world that it comes down. That's the exogenous factors from abroad. In Israel, we need to see rental markets, housing contracts, and mortgages have slowed down significantly, but we haven't seen it yet in rentals, which are about 25% of the CPI. And the other important factor is wages. Public sector wages contracts have not been settled for about 3 years. They're going to be negotiation now, and we need to make sure that they're done in a smart way that doesn't fuel up inflation. And of course, fiscal. There's a new government. The most important thing for them is to do a budget. A budget is a working plan, but of course, it needs to be fiscally responsible in a way that promotes sustainable growth.
Yeah.